Hi guys, today we're going to look at one of the most reliable price patterns, the head and shoulders and the inverse head and shoulders. If we have a quick look at the mechanics of them, you can see here, this would be a trend. The market trends higher, it then creates a higher high and a higher low. It then fails to break the previous high. This high fails to break that, we've got the low here, and then it comes down. In this instance, we've got the left shoulder, the head, the right shoulder, and then this becomes, between the two shoulders becomes a neckline. Once the market breaks that neckline, we're then looking to trade that market lower. This is a reversal signal. It's found at the top of an uptrend. The trade would be, you identify the lower high, this is the setup, and if it breaks this low, that's the trigger to get in. Where do you take the trade from? This is the projection from the top of the head to the neckline. You can see it's at the same distance, projected to the bottom. You'd be looking to target the trade down to here. So your entry would be, as soon as you break here, you can place your stop loss in two places, either above the right shoulder or an even safer spot above the head. And then the opposite is true at the bottom of a downtrend. An inverted head and shoulders looks like this. Likewise, the market's trending down, then it fails to break. It creates lower highs and lower lows. We then start to see it move higher and it fails to break this low. This low isn't as low as this one, and then the market breaks above this neckline again. And we'd be looking to do the same thing here, project this distance out here and target the trade. Here we've got cable, and you can see here is a bit of an example. We've got market moving lower, lower lows, lower highs, and I've started drawing this out, but you can start to see a bit of a head and shoulders pattern here. What you've got, a high, a lower high, a lower high, lower lows, lower lows. So you can see it's trending lower. It then creates a lower high again here, but fails to break the low. And all of a sudden, we've got a left shoulder, a head, and a right shoulder. If we then see this market break through here, we can expect to see this market trend higher. Two ways you could get into this trade. You could do it simply on the break of this high. So you'd be in here, you would have bought at this level. Your stop loss, as we mentioned previously, would either be below the right shoulder or the head, and in either instance it looks like a bit of a false break, but the trend is reversing and you wouldn't have got stopped out, and you can see this market go higher. But if we were to project the target here and then project it from the break, you'd be looking to target here. Target would be hit here. That's it for head and shoulders today. Hope you enjoyed it, and we'll catch you next time.